All right, let's go ahead and move on because I want to move into this topic today of fundamental analysis, but with a real specific focus. In our last podcast entitled, What Stock Should I Buy?, I shared some real basics on finding fundamentally sound stocks using something known as fundamental analysis. If you missed that show, I really encourage you to go back, especially if you're into investing or you know a lot about technical analysis, or maybe you're interested in fundamental analysis. We covered some really good stuff on that podcast. So do yourself a favor, go back and give that podcast a listen. I talked about the importance of growth, whether it's revenue growth or net income or earnings growth or sales growth. So understanding fundamental analysis is important as it helps investors identify sound companies to invest in, and it also helps traders focus their trading on high-quality stocks. Look, if you're going to be trading one of 5,000, 6,000 stocks here in the United States, why not be picky, right? Why not just sit down and say, I'm not just going to trade anything that moves. I want to trade quality stocks that move. Well, fundamental analysis will teach you which stocks to focus on and which stocks to stay far away from. So it's very, very powerful. Inversely, there's another type of stock analysis known as technical analysis. You just heard me mention it. Technical analysis focuses not on a company's financial statements, but instead upon the current and historical price and volume information. Basically, technical analysis teaches you how to read a stock chart so that you know when to buy, right? Our own profit tracker trend trading system is built entirely upon technical analysis. So it helps answer the question, when? When should I buy? When should I sell? When is the big question that technical analysis gives us, or the answer to. And as mentioned, fundamental analysis teaches you how to read a financial statement so you know what to buy, right? What should you buy? What stock should I buy, Jerry? Well, fundamental analysis will answer that question. When should I buy this stock, Jerry? Technical analysis will answer that question. Now, when you combine fundamental analysis and technical analysis, then you can really begin to see a difference in your trading or investment account. Now, in this episode, I want to go a little deeper with fundamental analysis, as I mentioned. You see, while our profit tracker trend trading system is powerful, it does not give us all the answers that we need for generating spectacular profits. Don't misunderstand me, though. The tripwire, the trigger, the confirmation are three visual signal system that we've created. Very simple for new traders. All of these are essential ingredients in the recipe for consistent profits. But there's another input that is also vital, and that is high-quality stocks. Think of our profit tracker trend trading system software like a expert home builder. The home builder can draw up a beautiful blueprint. It can execute it with precision. But if the builder does not have high-quality inputs like high-quality lumber, hardware, good tools, and skilled craftsmanship to do the actual work, the job will implode and will likely be a huge disappointment to the buyer. Our trading software works in the same way. It's like the expert builder that with high-quality inputs can create beautiful results. The software achieves optimal trading results when it's paired with high-quality stocks. In fact, it is nearly dead on in predicting when a high-quality stock will enter a new profitable uptrend. How can a trader know which stocks to put into the software in order to get consistent and profitable results? Well, there are multiple paths a trader can take in order to find high-quality stocks. But today, we're going to focus on one that we have discovered. It's a very little-known indicator called the F-score. If you've heard of it, you're in a huge minority. Most people have never heard of the F-score. Now, the F-score has a proven track record of revealing stocks that are poised to rise. If you've never heard of the F-score, don't worry, I'm going to explain it. It was created back in 2000 by an accounting professor named Joseph Piotroski. Now, Piotroski, who shuns publicity and rarely gives interviews, was virtually unheard of until a 2008 report from the American Association of Individual Investors, the AAII, revealed that his unique approach to stock picking was the only method out of the 56 different methods that they tested that actually had positive returns in 2008. Remember 2008 when the whole market was imploding? People were jumping out of windows, not literally, but I mean, market values of portfolios were sinking. People were scared. People were jumping out of the market. But Piotroski's model and his method was actually making money during the 2008 crisis. And he wasn't, doing anything spectacular or unbelievable. It was just a very strict, rule-based stock picking method. So what is it? What is this F-score approach to stock picking? Well, as I mentioned, the F-score is a metric based upon financial statement data, and it has a track record of revealing stocks poised to rise in value. It uncovers fundamentally sound companies by giving a 1-point score for each of the following 9 attributes. So basically, Piotroski identified 9 things I'm going to tell you right now, and he would give the stock 1 point if it met this criteria, each of these 9. And so if all 9 were met, then the stock would have a score of 9. It would have an F score of 9. If it didn't reach any of these, it would have an F score of 0. Okay, so let's run through them real quickly. Here are the 9 attributes that Piotroski looks at whenever he is looking at the stock market. Number 1, does the stock have positive return on assets for the current year? If so, Piotroski gives it 1 point. Number 2, does the stock's operating cash flow, is it positive now? If it is, they get another point. Number 3, a rise in return on assets. It's ROA. You've probably heard of that before. If that number is rising, they get another point. Number 4, operating cash flow is greater than net income. Now, this helps us measure the quality of the company's earnings. And if operating cash flow is greater than net income, then that company is going to get another score, so another point. Number 5, a decrease in debt funding or leverage. If they're deleveraging or if they're moving away from debt financing, then they are going to get another point for that. Number 6, an increase in short-term liquidity. They have more cash on hand right now. If that's true, they get another point. Number 7, the company has not diluted the value of its stock by issuing more shares to fund the company's activities. That's a big one. That's one that I've looked at for a long time. But in this particular case, the company gets another point if that is true. Number 8, an increase in gross margins. If gross margins are rising, then we are going to get another point for the stock. And number 9, the company is converting its assets into revenue at a quicker pace than last year. So that is number 9. And if that's true, the company gets another point. So a company's F-score can range from 0, literally none of the above are true, all the way out to 9, with 9 signifying the strongest companies and 0, of course, identifying the weakest companies. Now, in order to select the highest quality stocks, we like to stick with those stocks that have an F-score of 8 or 9. 8 or 9. So that means 8 or 9 of these facts are true of this particular company. So how has the F-score approach to picking stocks actually performed over the years? Well, according to Piotroski's 20-year study from 1976 out to 1996, if you would have bought the strong companies with F-scores of 8 or 9, and if you had shorted the weak companies with F-scores of 0 to 2, you would have earned an average of 23% per year. That's substantially outperforming the overall market return of 15.8 for that same period of time from the S&P 500. As fantastic as that sounds, the F-score approach is even more precise and profitable in recent years. In fact, think back to the market turmoil in 2008. Had you been using the F-score, your portfolio would have risen when everyone else's dropped like a rock. In 2008, the S&P 500 fell an astonishing 43%, while the high-quality F-score stocks rose on average 32.6% in the middle of a crash. Equally impressive is what the F-score can predict about weak firms. From 1976 to 1996, stocks with an F-score of 0 to 2 were 5 times more likely to wind up bankrupt or to delist from the stock exchange due to financial problems. So, how do you find high-quality stocks that score an 8 or 9 on the F-score scale? Well, I'm glad you asked, because here at Follow the Money, we have created a custom program that screens for stocks that currently have an F-score of 8 or 9. And here's one more kicker. We don't just look for a high F-score of 8 or 9. We use one more thing that Piotroski's research really stresses, and that is that we also want that company to have an extremely low PE ratio as compared to their industry group. So we want to make sure that the stock is in the bottom 20 percentile of the overall PE for their industry group. So these are value stocks with solid and improving fundamentals. So you always have your growth stocks that are, soaring. They have rising earnings, they have rising revenue, they have rising, net income, they have rising sales, all of this. But there's other stocks called value stocks. And these stocks are financially sound, but they've been overlooked. And oftentimes, when they're overlooked, it gives you an opportunity to take a position just as it's forming a new uptrend, and these oftentimes can be very powerful. In fact, I'm looking at the list right now that we have for all of our members of the F-score stocks. And in fact, right now we have 1, 2, 3, 4, 5. Members, if you're listening to this right now and you want to take a look at the stocks that we're talking about, simply go to ftmdaily.com/high caliber. High caliber, no dashes, high caliber, HIGH caliber. And then you'll notice there that we have, as of right now, 5 stocks with an F-score of 8 or 9. Five, right? Out of 5,000 stocks that are out there, we have 5 listed. The best performing one has made approximately 40% over the last, let's see, how long is that? About 5 months. So in about 5 months, we have one stock in here, Zumiez, ticker symbol ZUMZ, which has risen from $12 all the way up to $17, and it looks like it's going to keep rising the way that it's moving. So that's the highest performing one we've seen as of right this second. But if you're a member, you can log in to ftmdaily.com/high caliber. If you're a gold or a platinum member, you'll be able to see this list. And this list will give you an edge if you're looking for those value stocks with all the time solid and improving fundamentals. Now remember, the F-score is a rigorous financial litmus test, and very few stocks will score an 8 or 9. So you're not going to come in here and see 1,000 stocks, all the time. You're just going to see a small handful. But this small list of stocks will really often beat the market over time when you pay close attention to them, especially if you look for them to form a new uptrend within the profit tracker system and wait. Just be patient and wait, and you'll wait for that uptrend, and you'll have oftentimes a live one. We want the highest quality stocks, so we're always screening out all the underperformers and providing you with those stocks that make the cut. So the best way to use Piotroski's time-tested model is to use this list and pair it with our profit tracker trend trading system, which will give you the entry and exit signals for these stocks. Again, gold and platinum members can log into our website and navigate to ftmdaily.com/high caliber to see those stocks right now live. And if you're not currently a member, I want to encourage you to check out our services and consider becoming a member and get access to this list of high caliber stocks that have high F-score ratings. If you're looking for good stocks and don't know what to buy, this can be a great answer. Hey friends, Jerry Robinson here from Follow the Money. Are you ready to learn how to trade the financial markets? Or are you ready to take your current trading to the next level? I want to show you how to trade stocks, commodities, currencies, and options for consistent profits. If you're ready to learn, I'm ready to teach you. In fact, we have created a very powerful trading software and education system that provides you with entry and exit signals on every US-based ETF and stock. Our powerful system allows you to identify the current trend in any US-based ETF or stock with high probability entry and exit ideas. You can use our software on any device. And you'll also get access to ongoing live trading coaching videos. Whether you're a complete newbie to trading or whether you're an experienced trader, you'll love our live video coaching calls held every Tuesday and Friday morning during the live market hours. In addition to ongoing training through our videos, you'll also receive our best trading ideas every evening in our nightly trading report, in which you can log into our website and check out the latest uptrends and downtrends, along with your high probability trading ideas generated by our system. A lot of people already know how to trade, but they just need a coach. They need someone to help them along. And if that's you, you have found, I believe, the right solution in our trading software and education system. And right now, we are running a very special deal for 7-day free trial for our entire trading system. Try out our system. See if it's right for you. Complete, unlimited, and unrestricted access to everything. Simply go to ftmdaily.com/pro and sign up. Choose either monthly or annual and get started today. ftmdaily.com/pro.